If you think the biggest money in the world is being made in the stock market, I need you to hear this carefully. Because right now, there's a massive shift happening, quietly, strategically, and almost completely out of sight. And it involves a market worth over $41 trillion. A market most people never talk about. A market that's reshaping how wealth is created, who gets access to it, and who gets left behind. And here's the part that might surprise you. You're probably not in it. Not because you're not smart, not because you don't have money, but because this system was never really built for the average investor in the first place. And that's exactly why it matters. Because once you understand how this private market works, you'll start seeing the financial world very differently. You'll start realizing that what most people call investing is only one small part of a much bigger game. Let me explain. When most people think about investing, they think about stocks, maybe crypto, maybe real estate. Things you can open an app and buy instantly. Things that move every day, with prices constantly updating. That's the public market. It's visible, it's accessible, it's liquid. But behind that, there's another layer, a much bigger one, the private market. This is where companies raise money before they ever go public. This is where billion-dollar businesses are built long before you ever hear their names. This is where early investors, venture capital firms, private equity funds, institutional players position themselves years ahead of the crowd. And by the time those companies finally reach the stock market, a huge portion of the wealth has already been created. Think about that for a second. When you bought shares of a company after its IPO, you were stepping into a story that had already been playing out for years. The early stage investors, they were there when the company was still small, still risky, still unknown. That's where the biggest upside usually lives. And that's why this $41 trillion private market is so powerful. Because it's not just big, it's early. Now here's where things get interesting. For decades, access to this market was extremely limited. You had to be a large institution, a high net worth individual, someone with deep connections or serious capital. The average investor? Completely locked out. But that's starting to change. And this shift is one of the most important financial trends happening right now. Because as the private market grows, and it is growing fast, companies are staying private longer than ever before. In the past, a company might go public relatively early in its growth cycle. That meant retail investors could participate in a meaningful part of that growth. But today, many of the world's most valuable companies are delaying their IPOs. They're raising billions privately. Scaling massively, expanding globally, all before ever hitting the public market. Which means by the time they finally go public, a significant portion of the growth has already happened. And that changes everything. Because it shifts where value is created. It shifts where opportunity exists. And it shifts who benefits the most. Now, I'm not saying public markets are irrelevant. Far from it. They still offer incredible opportunities. They're still one of the best tools for long-term wealth building. But what I am saying is this. If you only understand public markets, you're only seeing part of the picture. And in today's financial world, understanding the full picture is what gives you an edge. Let's go a little deeper. The private market isn't just one thing. It's a combination of different areas. Venture capital, private equity, private credit, and more. Venture capital focuses on early-stage companies. High risk, high reward. These are the startups trying to become the next big thing. Private equity focuses more on established companies. Buying, improving, scaling, and eventually exiting at a higher value. Private credit involves lending money outside of traditional banks. And in today's environment, this area is growing rapidly because companies are looking for alternative sources of financing. All of these together create a massive ecosystem, and that ecosystem is where a lot of the world's capital is flowing right now. Why? Because private markets offer something public markets often don't. Control. In public markets, you're buying shares in a company, but you don't control how it operates. In private markets, large investors often have direct influence. They can shape strategy, guide decisions, and actively drive growth. That's a very different level of involvement. And with that involvement comes the potential for higher returns. But also, higher risk. Because private investments are less liquid, you can't just sell them instantly. They require patience, long-term thinking, a different mindset. And this is where most people struggle, because we've been conditioned to think short-term, to check prices daily, to react to every movement, to expect quick results. Private markets don't work like that. They reward patience, they reward conviction, they reward people who can stay in the game without constant feedback. Now here's something even more important. This shift toward private markets is not happening in isolation. It's connected to bigger global trends. Rising interest rates, changing banking systems, institutional demand for higher returns, technological innovation. All of these factors are pushing more capital into private assets because large investors are constantly looking for an edge, and when traditional markets become more competitive, they look elsewhere. That elsewhere is often private markets. So what does this mean for you? It means the financial world is evolving, and if you want to build real wealth, you need to evolve with it. Not necessarily by jumping straight into private investments. That's not realistic or even appropriate for everyone. But by understanding how money flows, by understanding where value is being created, by understanding the difference between being early and being late. Because that awareness alone changes how you invest. It changes how you think. It changes how you position yourself. Maybe you focus more on companies that are deeply connected to private market growth, investment firms, asset managers, platforms that benefit from this expansion. Maybe you pay closer attention to industries attracting large private capital. Maybe you shift from short-term trading to long-term positioning, because ultimately, this isn't about chasing something exclusive. It's about understanding the system. And once you understand the system, you stop reacting blindly. You start making intentional decisions. Now let's talk about something most people don't realize. This $41 trillion number, it's not static, it's growing, and fast. As more companies stay private longer, as more capital flows into alternative assets, this number is expected to expand significantly over the coming years. Which means this shift is not temporary, it's structural. It's redefining how wealth is created on a global scale. And whenever something like that happens, there are winners, and there are people who get left behind. The winners are not necessarily the smartest. They're not necessarily the ones with the most money. They're the ones who understand the shift early and adjust accordingly. The ones who stop thinking in old frameworks and start thinking in new ones. Because the biggest risk in investing is not volatility, it's ignorance. It's not knowing where the game is moving while still playing by old rules. So let me ask you something. When you look at your current strategy, your current mindset, your current understanding of the market, are you seeing the full picture or just the part that's easiest to access? Because the difference between those two perspectives is the difference between following the market and staying one step ahead of it. And in a world where trillions of dollars are moving quietly behind the scenes, that difference matters more than ever. So don't ignore this. Don't dismiss it as something not relevant to you. Instead, use it as a signal that the financial landscape is changing, a signal that new opportunities are emerging, a signal that the way wealth is built is evolving. Because whether you participate directly or not, this shift will affect you. It will influence markets, valuations, opportunities, and outcomes. And the earlier you understand it, the better positioned you'll be. So the next time you hear about a company going public, don't just ask, is it a good investment? Ask a better question. How much of the growth already happened before this moment? Because that question, that awareness, is what separates surface-level investors from people who truly understand how wealth is created. And once you see that clearly, you don't just invest differently, you think differently. And in today's market, that's the real advantage.